Welcome to RagingFX's Forex trading course, week number 6. If you would like more information about this course, please visit us at RagingFX.com. Today we'll be covering part 3 of our Forex risk management segment. But first, let's look at a quick review from part 2. In part 2, we divided up the 12 major currency pairs into 3 groups. Just for a quick review of terms, the currency on the left is called the base currency, while the one on the right is called the quoted currency. As you can see in this table, they are separated by the role the US dollar plays in each pair. So Group 1 shows the US dollar as the quoted currency, Group 2 shows it as the base currency, and Group 3 are pairs that do not involve the US dollar at all. Now you might be asking, why? Why did we categorize these currency pairs into these 3 groups? Great question. To make an important distinction, here goes. Not all pip price movements render the same gain or loss. Remember from part 1 how we compared pip price movements between the euro dollar and the dollar CAD? A 30 pip price movement in the dollar CAD turned out to be shorter than a 30 pip price movement in the euro dollar. The important message here is that not all pips are alike, hence comparing them requires some extra calculations. Which brings us to the following questions. How can we compare pips from one currency pair with that of another, when they render different values like we saw with the euro dollar and dollar CAD? The answer is straightforward. If you're going to compare apples to oranges, then you need to calculate their equivalent pip values in US dollar terms, using the tips and tricks from the pros explained in part 2 in this series, for example. Another question you might ask, is there an easier way to do these calculations to avoid making potential errors? Fortunately, the answer is yes. It involves a similar process as that used by Weight Watchers, a company that helps overweight individuals to lose weight. Now listen up, you're going to love this idea. But first, let's learn how Weight Watchers works. If you're not familiar with Weight Watchers, here's a quick review. On the right are food items you can eat. In theory, you can eat anything you like. However, there's one caveat. Every food item gets a value called Smart Points. These points allow food items to be mixed and matched directly. They also offer an app that displays a maximum number of smart points that are not to be exceeded in order to achieve the objective weight loss. In this example, that number is 30 smart points. As stated on their website, just keep track of what you eat, stick to your budget, and start seeing results. Okay. Now that we're all starving, what does all this about Weight Watcher have to do with Forex trading and RagingFX signals? Plenty. In this next slide, we have lined up 3 sample RagingFX signals. They would be comparable to the food items on a plate that we just saw. But instead of saying every food item gets a value called Smart Points, we're going to rephrase this statement to say every RagingFX signal gets a value called Smart Pips. To locate the Smart Pip number for RagingFX signal, follow the blue arrows in this slide. You can see that Smart Pip values are located to the right of the buy or sell signal. This Smart Pip number allows you to mix and match pips from different signals. To get a better idea of how these combined numbers can be used, let's compare this second slide we saw from Weight Watchers. Again, if we replace a couple of terms in bold, then our maximum number of smart pips becomes 30. And more important, their advice applies to us when slightly reworded as follows. Just keep track of what you trade, stick to your budget of smart pips, and start seeing results. I bet you never thought that managing your daily risk trading Forex could be as easy as monitoring your calorie intake with Weight Watchers. In many regards, this innovative approach, in tandem with the RagingFX algo, will become a game changer for many traders. So what have we learned so far about RagingFX's Smart Pip system? First, just like Weight Watchers divide the Smart Point system to compare many different types of food items, our algo automatically calculates the Smart Pip number for every signal it generates. That way you can truly mix and match signals to monitor your daily risk exposure. Oh, and if you haven't figured it out already, yes, that means you won't have to do any calculating on your own because the algo will do it for you. But at least you've gained a greater appreciation for using RagingFX when you trade. With RagingFX's Smart Pip system, managing your daily trading risk, a task very often overlooked or ignored by traders, could not be easier. Let's take a look at 3 trading examples using the signals shown before. Example 1. Example 1 shows a sell trade for a euro sterling. Here's what you should do when you read this signal. Step 1. Check the number located to the right of the buy or sell term. In this case, it is 28.7 smart pips. Step 2. If your daily limit is 30 pips and you haven't placed a trade earlier, then based upon a 30 smart pip limit, the most you should trade is 1 lot of euro sterling. Remember that all of our pip calculations are based on a 1 lot trade size. If you split the trade size to half a lot, for example, you can then half the smart pip number too, in this case from 28.7 to 14.3. Step 3. You cannot, under any circumstances, place another trade in this account until this trade is closed. This last step is a rule that should never be broken if you want to meet your return goals. Now let's look at example number 2. Here we have assigned 13.8 smart pips to a dollar-yen trade. At 13.8 smart pips, you could place a 2-lot order for a total of 27.6 pips. Theoretically, you could place up to 2.17 lots if you wanted to use up all your full 30 smart pip limit, but we recommend using round numbers to avoid making any calculation errors. Errors can cost you, so always keep things super simple. Now let's look at our last example. Here the assigned smart pip value exceeds our 30 smart pip allowance by 6.1 smart pips. When that happens, you should figure in your head the estimated fraction between your maximum number and the smart pip number. In this case, you would divide 30 by 36, which is the same as 5 divided by 6, which is 0.83. And to keep things simple, we would suggest choosing 0.8 lots or less. Okay, to wrap things up, here are some tips and tricks from the pros. First, pip calculations do not have to be exact. If you're over or under 1 or 2 pips, that is okay. Second, a good strategy is to split your maximum allowed trade size in half. It can offer more flexibility with averaging down or up, for example. And last but not least, always adhere to our golden rule number 2. Once your 30 smart pips are in play, you cannot, under any circumstances, enter into another trade unless you add more equity to your account or close a trade. The 30 smart pip number should always remain a solid cap, never to be exceeded at any time. Just like in our Weight Watchers example, cutting corners will not render the desired results. Remember what they said, stick to your budget and start seeing results. We hope you have enjoyed this 3-part series in risk management. If you know of others who could benefit from our course, please share the video link with them. Of course, liking us is always welcome. Thank you for your time. If you have any questions, please post them below or send us an email from our website, RagingFX.com.